Hello friends, welcome back to my channel Traders Destination. Today is Saturday, and as you all know that whenever we launch any new strategy, we choose to launch it in the weekends so that you get chances to practice it over the weekend and then start applying it and observing it during the weekdays. This is one of the strategies which is already published in our channel, and the name of the strategy is a Spectacular SBI Strategy. The earlier version was published in Hindi, and this version is the English version of the same, friends. So friends, the rule for this strategy is very simple. As you can see on the screen, I will probably place my cursor, try to look through my cursor so that I could actually tell you what the rule is. You have to watch State Bank of India equity in a 15 minutes time period. Okay, the scale has to be in a 15 minutes time scale. You can watch it in a candlestick format or you can watch it in a bar format. Choice is yours. And you need a 50 exponential moving average added onto it. Now as you can see over here in this picture, what you have to do is, like, say for example, if this is the chart for a given day, you need to ignore the first candle of the day. Don't look at the first candle of the day. Start looking for the range for the next three candles of the day. Okay, so basically you have to ignore this first candle. You have to watch the second, the third, and the fourth candle of the day. After watching for these three candles of the day, this second, third, and fourth candle of the day, you have to measure the high and low of that. Like, say for example, in this given example, the high of this three candle is 268 rupees 50 paisa, and low of these three candles is 266 rupees 15 paisa. You have to measure what is the difference between the two. If the difference between the high and the low of the next three candles of the day is more than 3.95, okay, whatever is written over here in point 2, if the difference of second, third, and fourth candle range is more than rupees 3.95, we are not supposed to take a trade. That's the first thumb rule of the strategy. Then in what scenario are we going to take the trade? We should be taking a trade if in case if it is less than 3 rupees 95 paisa, we need to add a buffer of 5 paisa on top of that and then get into a trade. Now say for example, the moment you are seeing this three candle range, you will not be knowing in which direction the price will be breaking. Will it be breaking towards the positive side, or I mean on the buy side, or will it be breaking towards the sell side? You will not be knowing that. Hence, what you have to do is you have to place two different orders. You can place two orders, one at the buy side, one at the sell side, and you have to wait and watch which direction it breaks first. Whichever direction it breaks first, you have to take a trade on that direction, and you have to cancel the trade for the reverse direction. As per this strategy, your stop loss should be of 2 rupees only. Maybe whatever, maybe the, like the candle range, but your stop loss has to be always rupees 2 only. And target will be rupees 1. That's going to be your first target, and rupees 2 is going to be your second target. As you are seeing in this diagram, for this given day, the buy got triggered, and as you can see that the high of the range, high is 268 rupees 50 paisa. You have to add 5 paisa buffer to it and then enter into a buy trade. So it's going to be 268 rupees 55 paisa is going to be the buy trade. Your target one is going to be rupees 1, which is definitely this. Target one is 269 rupees 55 paisa, and target 2 is going to be your this price, which is around 270 rupees 55 paisa. One important thing in this strategy is, while you are into the trade, you have to also check this 50 exponential moving average line. It has to be at a distance of more than 1 rupee from the entry price. Okay, be it at the sell side or be it at the buy side, you have to see that the value of this 50 exponential average line should be at a gap of more than rupees 1. If it is not in a gap of more than rupee 1, then you are not supposed to take that trade. Okay, I will be going to the chart and I will show you how to set the chart up, as well as how to actually look into some of the days. I will do that. But before I do that, I would like to thank my Traders Destination R&D team, in which Mr. Ashish, Mr. Mandar, Mr. Ayan, and Mr. Nitin. These four people are the backbone of this Traders Destination research and development team, who helps in observing various strategies, refining various strategies, creating various strategies. And this strategy is the first presentation from Traders Destination Research and Development team, friends. So with this, let me take you to the chart so that you all can see what exactly is to be done in the chart when you actually set it up. Okay, so here I come to the FIRES platform. As you all know that FIRES Securities is the platform that we actually look into, and Traders Destination is the official channel partner of FIRES Securities, and hence whatever we do, whatever we watch, we do it basis that platform only. Okay, so how to set the chart up? As I mentioned that you can actually look it in a format of a bar or a candle, doesn't matter. Whatever is your choice, you can look it in a format of a bar as well as a candle. So I'm just taking both the cases. Let me show you how it works over here. All you have to do is you have to add an indicator, which is your 50 exponential moving average. You have to just go over here in indicator. You have to write moving average exponential. The moment you click on this, you will be getting a default. Okay, you will be getting a default setting of the indicator. What you need to do over here is you have to just change it. You have to change the value from 9 to 50. But rest everything is okay. If you want to change the color, you can change the color. I just change it to yellow so that it looks brighter on a scale of on a darker background. So that's exactly what you need to do. After that, what's needed to be done is you have to actually watch the candle, and you have to see if the three candle range is less than 3.95, only then you are going to take the trade. Now let's see what happened yesterday. So today is 12th of August. It's night 2 a.m. So Friday was the day. Here is the day of Friday when the results of SBI was announced, and it was a day when many people definitely made a lot of losses in various strategies and in various trades. Let's see what SBI and how SBI performed on that day. So you are not supposed to look into the first candle of the day. The second, third, and the fourth candle is something that you should look. Okay, let me take it to full screen so that it becomes easier for you to watch. So the second, third, and fourth you can see very clearly, and you can also see what's the high of these three candles. The high of these three candles is 312 rupees 70 paisa. So in order to see what is the high and the low of the candle, you can actually look into this top portion of the screen, where the price will keep changing. So if I have placed my cursor on the on the second candle of the day, the high is 312 rupees 70 paisa, and the low of this three candle range is 308 rupees 70 paisa. So the gap from 308.70 to 312.70 is of 4 rupees, and hence we are not supposed to take a trade. Friends, not taking a trade is equal to taking a trade as well. So if you are not taking a trade, it means that you are avoiding a trade because your strategy is not supporting it. Don't try to force fit your trade on that day when it is not happening. It may lead into losses, and that's exactly what had happened. In spite of that, if people would have taken this trade out of greed or whatever, they would have ended up making a loss. Okay, so now let's look into another day. Let's see what happened in this day, the day before. Over here also you can see what's the range low. The range low is 311 rupees 25 paisa, and the range high is 315 rupees 40 paisa. Okay, so again it's more than 4. We are not supposed to take a trade on this day. Let's see the previous day. Now here comes the previous day, and in this day again the same scenario, because the third candle, if you are seeing, it's like 303 rupees 05 paisa, and by the time your fourth candle is getting over, it's like 304 rupees 60 paisa. So it's again more than 4 rupees. We are not supposed to take a trade. Let's see what happened this day. So the first candle you are not supposed to see. The second candle high is 309 rupees, third and the fourth. The fourth candle, okay, the third candle low is 306 rupees. So what is the range? The range low is 306 rupees. The range high is 309 rupees. So what's the gap? The gap of the range? The range value is of 3 rupees, and hence you can take a trade. I'm just marking the high and low of this candle range. Let's see what happened this day. Okay, the high and the low of the candle range is marked. The moment, what was the low of the day? The low of the day was 306 rupees. Okay, so hence if you are entering into the trade, you have to take a buffer of 5 paisa and enter into a trade with target 1 as 1 rupee, target 2 as maybe the range or whatever is low, the range of the 3 candles, or 2 rupees, whichever is lower, and then definitely you can keep trailing till whatever profit you get. Now let's see what happened on this day. I also called out one more filter, that is, whenever you are entering into a trade, you have to ensure that the 50 exponential moving average line is at a distance of more than 1 rupee from the entry point. So on this given day, the entry point could be 305 rupees 95 paisa. From there, it has to be 1 rupee. It means that the value of this 50 exponential moving average should be minimum 304 rupees 95 paisa. So what you can clearly see over here, the moment I place my cursor over here, you can look into the right hand side. Let me just draw one more line so that it becomes clearer for you. So here the value of the 50 exponential moving average was, which was at around 303 rupees 85 paisa. So we were well below rupees 1, and hence we can definitely get into the trade. And we entered into the trade the moment the range got broken by 5 paisa in this candle. We entered into the trade. The first target was of rupee 1, second target of rupee 2, and definitely the third target will be of whatever is the range of the candle, followed by till where you can trail. So let's see till where it went. If we made a short sell at 305 rupees 95 paisa, it should fall till 304 rupees 95 paisa. And it, look at this candle, it had already gone down till 304 rupees 65 paisa. It means your 1 rupee target is booked. Now, when to do your second target? As I mentioned, that you have to look into this 50 exponential moving average. The whole reason behind looking into this 50 exponential moving average is, if you see the moves of State Bank of India equity, it respects this line a lot. Just look at this condition. Just look at this place. The price came down. It touched the 50 exponential moving average and it went up. It again came down. It was playing over here for some time, and then it barely managed to break it down. Again, look into this day. Price went up and again it came down. It touched the 50 exponential moving average for a decent period of time, and after that it went up from here. So like that, if you keep scrolling, if you keep scrolling to your left and right, you will see. I'm just doing it like this. Just look at the pattern in which State Bank of India moves. It so nicely respects this 50 exponential average line. Just have a look at it. Just have a look at the slopes in which it bounces from this 50 exponential average line. So hence the strategy, friends, you have to keep this in mind, that whenever you are trading in this strategy, your target can always be, the first target can be rupees 1, or second target if it is more than rupees 1, and if in the way your 50 exponential moving average is coming, then that is going to be your second target. Okay, so for this day, the example that I was quoting you, your target 1 is booked. For your target 2, although your target 2 will be rupees 2, or the 3 rupees, whatever is your candle range, but just because 50 exponential moving average is right over here, you have to keep modifying your target to the best price possible. Okay, if you want to trail, definitely you can trail. In all my videos, I always say that, see, whenever you are trading in any of the equity strategies, be it uh, the breakfast strategy, be it the Tata Ki Takat, the strength of Tata, the name of the strategy that we had already launched, or be it this strategy, in any of the equity strategies, whenever you launch, I mean, whenever you trade, The best way of trading in that strategy is you have to place two different orders. Your first order is going to be with target 1. So your target 1 is going to be of 1 rupee. Okay, so in that case, if 306.05 is your entry price, so this somewhere around here is going to be your target 1. 50% of your, like 50% of your of whatever number of shares you are trading with has to be at target 1, and you can place a second order for target 2. So like that, what happens, like you're going to save your trade. Like it's not going to be a complete loss kind of a day. Even if you are achieving target 1, you should be happy with that. And the moment you achieve your target 1, you can actually trail with stop loss so that you can maximize the profit for the remaining 50%. Look into this day what had happened. You have taken a trade over here, you have achieved your target 1. The moment you achieve your target 1, the best way of doing it is, see, this is the instance when you booked your target 1. The moment you do that, you are supposed to modify your stop loss to the entry price of the in which you actually entered into the trade. And what is the entry price in which you entered into the trade? It is 305 rupees 95 paisa. Okay, so you have to move your stop loss to 305 rupees and 95 paisa. Let's say, for example, somewhere around here. Now, if that is the case, the moment if you are doing it, you can see that the next candle would have actually hit that stop loss. So if you are practicing this way of trading, probably you would be getting a benefit of maybe target 1 for a 50% of your stocks, and for the remaining 50%, maybe you will be ending up getting no profit, no loss. But this is going to save you from making losses. Okay, now see what had happened over here. The price got reversed over here. Okay, price definitely did not fall till rupees 2, but there were high chances that if that would have happened, your stop loss would have been hit. Okay, so hence this is actually strictly advisable that you should be trading like that. Okay, sorry, my bad. Actually, this day, had you actually not trailed your stop loss, because ideally your stop loss is going to be 2 rupees, and hence if you are entering at 305.95, 307.95 will be the price where your stop loss will be. Now just look into this scenario. You are trading with basically, say for example, you are trading with 100 shares of SBI. If you are trading with 100 shares of SBI, this line over here is going to be your entry price, right? With your target, maybe target 1 is this, target 2 is somewhere on top because target 2 is not reached. So what you are supposed to do is you are supposed to place 50% of your order here. The moment this 50% order gets achieved, you are supposed to modify this stop loss and bring it over here. So had you done that on this day, what you would have got? Say for example, if you're trading with 100 shares, 50 you will be getting 50 rupees. For the remaining 50, you will probably get a no benefit. Okay, because it's going to be a no profit, no loss. But had you not done that, had you kept all 100 shares with target 1, then what would have happened? Had you kept all 100 shares as target 1, you definitely would have got 100 rupees. But what would have happened if you have thought that let's keep target 2 as a target, let's keep all my 100 shares to rupees 2? You would have ended the day with a loss of 2 rupees, which means you would have ended the day with a loss of 200 rupees, because your stop loss is of 2 rupees, and you are trading with all 100 shares. Think about it, friends. If you do this kind of a trading, in the long run, you are not going to survive. If you have to sustain in the long run, if you have to remain profitable in the long run, you have to know the techniques of trailing stop loss. You have to play with the risk. You have to play with the money that you have. You have to do your money management properly so that in the long run you remain profitable. So this was a very classic example, the best example that I could pick up from all the days. But I would still like to show you a few more days which are maybe simpler, and then you can understand the power of this strategy. So let's look into the previous day. So what's the value of this candle? The low is 304.20, high is 307.45. Okay, so the range is of 3 rupees 25 paisa. Perfect. What you have to do is, where is the 50 exponential moving average line? It's below down here. So here, this price is going to be your entry price. This is going to be the candle low. You never know where your candle, like will give, in which direction candle will give a breakout. In such a scenario, you can enter into any direction, be it on the buy side or be it on the sell side. So say for example, if you're into the buy side of the trade, your stop loss is going to be definitely 2 rupees. So what you can see over here is 307.50. So 305.50 is going to be your stop loss price. This is your stop loss price. As I mentioned, what we are supposed to do is, if you are trading with, say for example, 100 shares of SBI, you have to place two different orders. First order with a target of rupees 1. So 307.50 30 should be the entry price, because 307.45 is your high of the day, I mean high of this three candle range. So hence your first target will be 308.50. So where is 308.50? Here is 308.50. And what you are supposed to do, the moment your any candle of the day is touching this target, the moment any of the candle is helping you achieve your target one, say for example you are trading with 100 shares, so 50 of them are getting booked here. The moment you are actually getting into this place, you are supposed to modify your stop loss from rupees 2 to this price over here. Okay, this is a trick I am teaching you, friends. If you are able to do any strategy by in this fashion, you will be able to maximize your profit in the long run. Now see how you are actually maximizing your profit. So you have actually placed your trailing stop loss over here. Okay, this line over here, let me change the color of this line. Let me change it to maybe amber color. Okay, so this is your stop loss line. So you have placed it here. What is your second target? Your second target is rupees 2. So where is rupees 2? If 308 rupees 50 paisa is your target 1, then 309 rupees 50 paisa is going to be your target 2, right? So here is your target 2. The moment you are achieving your target 2, then the complete market is yours. The best way of trading once your target 2 is reached is, again, look into the candle which gives you target 2. What you can do is you can modify your stop loss below that candle. So I am modifying my stop loss below the candle which gave me target 2, and I am watching it for next 15 minutes. Again, after 15 minutes, when this candle gets over, I am modifying my stop loss to the below of this candle. Okay, see, if you wish, you can definitely book the remaining 50% in your target too, but my objective is to show you how you can actually maximize your profit, and hence I'm showing you this trick. What happens again? See, look at this candle is formed. The moment this candle is formed, again you are modifying a stop loss and placing it below this candle. See, the moment you are doing this, and after that, what happens is this red candle is formed and your stop loss is hit. So in the process, what have you done? You were supposed to make a profit of 2 rupees, but you ended up making a profit of 2 rupees 45 for 40 paisa. Just look at the price over here. It's 309.50. You would have made a profit of 309.95. And if your appetite is full, if you are okay with whatever you got, you can actually place at whatever price you want. Okay, so this is a way you should be trading whenever you are trading with any of the equity shares as per any of the strategy that I have shared in my channel. So this is going to help none other than you in the long run. So that's all, friends. This is a very simple strategy. I would like you to actually look into it, understand it, and then actually apply it. People who are already connected to me, to us rather, in the Traders Destination Forum, in the Telegram, they actually know how and what we are doing this. They trade into this by looking into the chart every day, and I'm sure it's going to benefit you all if you're willing to join us in the channel. Okay, so friends, one very essential thing that I should call out, that whatever I mentioned over here are all basis my own observation and understanding. Neither of the teammates who I have, the names that I had taken, Ashish, Mandar, Ayan or Nitin, neither of them, including me, are SEBI registered advisors. So hence, please don't go with our advice. Don't take it as an advice. This is just an observation that we are sharing with you through our experience. That's all, friends. Hope to deliver you much more things. Hope to share with you a lot more knowledge. And thanks a lot for liking us, for supporting us, and taking our count to over 15,000 as on it. If you like this video, do give a thumbs up and do join our channel. Thank you so much, friends. Happy trading.